My friends, this is the question I get the most. At dinners, in messages, in comments, from people who have invested for decades and from those who just received their first paycheck. And honestly, I like this question because the debate between these three assets reveals exactly how you think about money and whether that thinking is working for you or against you. Before I give you my answer, and I will give you a direct, no-nonsense one, let me warn you of something. Anyone who tells you one of these is always the winner in every situation is either selling you something or has never managed real money in a real crisis. Each of these assets is exceptional. Each has made people very wealthy, and each has conditions where it shines and conditions where it disappoints. Let's go through them clearly. Bitcoin, the high-octane option. My friends, let's start with the most controversial. Bitcoin is the most asymmetric investment of our generation. The upside is extraordinary. The volatility is just as extraordinary. In 2020, it lost 50% of its value in a single month. Then it rose 600% the following year. If your heart can handle that, Bitcoin may be for you. If you checked your portfolio every hour during that drop, it probably isn't. Here's how I see Bitcoin in 2026. It has crossed a critical threshold. Institutional adoption is real. BlackRock, Fidelity, and sovereign wealth funds hold it. ETF approval has brought legitimacy. It is no longer pure speculation, but it is still volatile, and that won't change soon. Bitcoin is a bet on the future of digital value and the erosion of trust in traditional systems. If that plays out, the upside is massive. If it doesn't, the downside is real. This is not emergency fund money. It's for the aggressive part of your portfolio. For most investors, 5 to 10%, not everything. Gold, the timeless protector. The second asset, trusted long before Bitcoin existed. Gold doesn't excite people, and that's exactly why it works. In 2026, with geopolitical tensions high, global debt elevated, de-dollarization accelerating, and central banks buying gold at the fastest pace in decades, gold is doing exactly what it was designed to do. Protect, quietly, consistently. Gold won't make you rich quickly, let's be clear, but if you want something that has preserved purchasing power through every war, crisis, and market collapse, gold is unmatched. My view, gold deserves a permanent allocation in every serious portfolio, 10 to 20%, not as speculation, as insurance, real estate, the working asset. The third asset, and my personal favorite for one key reason. Real estate pays you while it protects you. Bitcoin sits there being exciting, gold sits there being reliable. Real estate sits there collecting rent every month, regardless of headlines. In 2026, even with higher interest rates, income-producing real estate remains one of the strongest wealth-building tools. Population is growing. Housing supply is constrained. Demand is persistent. It also offers something the others don't: leverage. Used responsibly, it accelerates wealth. Used poorly, history has shown the risks. Its limitation is liquidity. You can't sell a building overnight. This is a long-term game. The honest answer: where should your money be? My friends, here is the real answer. Not one, all three, in the right proportions. Bitcoin, 5 to 10%, high risk, high potential. Gold, 10 to 20%, your financial insurance. Real estate, as much as your capital and patience allow. Income generating and inflation resistant. The rest, diversified equities, bonds, and cash. The debate isn't Bitcoin versus gold versus real estate. The real question is, how do you combine them to build a portfolio that grows, protects, and generates income at the same time? That's not compromise, that's strategy. Let me leave you with this. In 2026, the world is too uncertain to bet everything on one asset. Bitcoin alone carries risk. Gold alone limits growth. Real estate alone lacks liquidity. But the investor who holds all three, properly balanced and aligned with their goals, sleeps well. In every market, every crisis, every year. Diversification is not indecision, it is sophistication. Like, subscribe, and share this with someone still stuck asking which is best, because the real answer, as always, is smarter than the question. See you in the next video. Take care of yourselves and take even better care of your money.